no, 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 no. No. Boom, 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 boom. Let me get things rolling. Do 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 do. Where is everything? There it is. There we go. Okay, that's rolling. What's up, everyone? Give me a moment while I get some things set up. Do 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 do. All right. Where is the Discord? Do, 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 do. Let's grab this. And place this here. Give me one moment, y'all. One moment. Boom, 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 boom. Hey. Giving everybody a chance to get in. Whomever is going to chill with a brother. Boom, 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 boom. Oh, I gotta put the link in. How about that? Copy link. There we go. Booyah. What's up, everyone? Happy New Year. Soon. I wanted to end the year a bit differently than I typically do. First of all, thank you for listening to the stream. Today is New Year's Eve. This is Toxic Thoughts, episode 69, the 2021 year in review. It's my 2021 wrap up. We're entitling this the BTC Crypto Wonderland, as far as the Crypto Winter Wonderland, because I believe we're heading into Crypto Winter. Think that's about to be a thing. I do have a list. Give me a second. Loading everything up. I actually have a list today. So, Toxic Thoughts is a part of ToxicHustle. ToxicHustle is our business. We do business consulting work where we're doing web development, web design, marketing for venture capital clients, restaurateurs, entrepreneurs. It's what we do. In the transition for 2021, what I typically do every year is I'd call up my friends pretty much at the beginning of the year, and I would have a conversation with them and, tell them my thoughts on how this year was, because I'm a Sag. So it's all about being a December baby. I think a lot about the end of the year around about my birthday. And business wise, I start really thinking about it in November, start kind of plotting out my 2020, my year, my next year, or 2022. I start planning it around about December, and then start executing it before January. And that's what we've kind of done, right? Told y'all last week some of my thoughts, my analysis, um, some of our plans for 2022, what we're doing as far as trades. Um, for 2021, Toxic Hustle, what it is our motto is the world is toxic, or this business landscape is toxic, and our job is to help you hustle through it. Um, every time I would tell my friends what I thought the year's transition, so like each year I tell them, hey, this is what's going on, this is what we're doing. You know, it gets to the point where I kind of want to just say it once, send it to everybody, and be like, this is it. This is what we're doing. This is how we've done for this year. Don't know exactly what you're going through, or what you've seen um, over the last few years, but this is kind of what our thought process is, or what my thought process is. Um, my job at Toxic Hustle is I'm the strategy officer. My job is to figure out the business strategies and the tech strategies we're going to implement through not only this year, or for the next 5 to 10 years. Where do we see ourselves? Where do I see myself as a business person? So some of the main strategies this year, because we were so heavy with service and clientele, was like last year, from 2019 to 2020, right? The transition, we at the end of 2019, was we're going to transition, excuse me, the end of 2020 to the transition to 2021. We made a decision that we were going to have to step away from clients. We needed to step away from clients. If we didn't step away from just concentrating on clients, if our clients, which were seemingly having a problem with disposable income, as far as these businesses, we weren't seeing as many clientele come in for web development service work. We saw a little bit more interest in our marketing services, but again, what they were looking for was a patch to a problem of wanting to market and promote without spending money, but not wanting to spend time on really building out the social brand, right? So this year we stepped away from dealing with any clients at all to focus on our business internally. How do we make money without any clientele whatsoever? Now, this has given us an edge for next year. The reason being is we've taken an entire year to jettison clientele work to just figure out how do we make money without clients. How do we basically put ourselves out of business? I think Gary Vee talks about that. And that's important. How do you put yourself out of business? So if we didn't have clients, boom, we're out of business, right? So we did that this year. We've gotten through the year. We did some investments in cryptocurrencies. It was a great bull run. We got back into crypto right around the China FUD. Started doing toxic thoughts. We brought back CryptoPlunder and started doing toxic thoughts not too long, but I want to say June or June-ish or so. And we've done around 69 episodes. So that's a lot of content over an hour because y'all know I'm long-winded. That's a lot of content that y'all heard out of my head in a short amount of time. And we're going to get back into that heavy in 2022. My goal is to have a better way to take economic data to use it for business purposes. So that's our focus with Toxic Hustle, is becoming a software platform. Internally, we're going to be our own software platform, our own data provider. We're going to begin gathering our own data that helps us make business decisions, investment decisions. And then, of course, we can license said data to anybody that's interested via subscription services that we may roll out in 2022. We want to keep things cheap. Like when I say subscription, like I'm talking like magazine, like $4.99. Like nothing expensive. Like we don't believe in like any education, like paywall crap. I don't have time for it for our business, and that's not part of our business. We are getting into automation. We're getting into more automation, more business automation. Our goal is to start working internally with, freelancers to outsource service work. So when we and if we decide to get back into clients, if we decide to do it in 2022, to help businesses with this new automation marketing strategy that we've worked on all year, as well as we're starting to get into the web app space and soon can connect to any quote unquote Web3. But I'm waiting for it to be connecting to Polygon network. So if we're going to do it, it's going to be Polygon because we know Ethereum has the gas fees are too expensive. Now, earlier this year, I started showing y'all these charts, right? The hash rate. Now, I want you to see something. We are now seeing a dip down in the hash rate for Bitcoin. Now, when I tell you crypto winter comes fast, I mean it. It's not a game at how fast crypto winter will hit you. January is no fun. So I'm saying third week, fourth week of January, please be careful. In the stock market, in the crypto markets, in any assets that are not that are speculative, because what we're currently at, and why when I was showing y'all the charts and I was showing you our seasons of Bitcoin, this is how we played all year. And when I brought this channel back and started doing the recordings again, was right around this time frame. And this is when I was telling you when these dips were coming, and this is when I was also telling you when these pumps were coming. Now, towards the end of the year, we had already done our estimates at the beginning of this year to have Bitcoin floating in around 132,000, and that was if it played at 15 times its estimate. So we saw a depreciating value of how much you get per every halvening cycle. The first halvening cycle was in November 2012 for Bitcoin. The next one was 2016. The next one was 2020, May. And the next one will be 2024. We don't know exactly when. It just depends on how the system runs. But our estimates, we saw 20x. We saw, again, potentially a 20x you could have hit. If not, we dropped it down to it would be $132,000 if we had done 15x from the halvening cycle start point, which is the bottom of the trough. So if we're looking at what happened as to why we never hit the 100,000 was something that we learned this year, which we never put into any of our estimates because I never thought about it, was economic data. So closer towards the end of the year, as I kept saying in the videos, and you'll hear me if you go back and listen to the other Toxic Thought videos, you'll hear me say right around here, I was like, we don't seem to be having the surge that I thought, like this surge I thought would go higher than it was supposed to, right? And I was expecting things to happen that just were not popping the hell off. Like this surge was supposed to bring us here. This surge was supposed to pop us up, but we actually came down on that. And then I said, towards here, I was like, there's no way we're going to make it. There's not enough room to get through the rest of this halving cycle with where we're, with the velocity or the that we had. So it's around this time, I want to say here, November-ish, I started looking at economic factors. And those became part of how we begin to look at crypto or Bitcoin's run for the rest of the year. And that is why I told you that this week was going to be a painful week. I knew this dip would transition itself and play out. And again, y'all, we're not done. I told you this is like Mike Tyson portion of the season. So if there's nothing else you understand is that the end of the year, you're going to take some losses, right? Hedge funds, investors, institutional investors are going to begin to take their profits in December. Not profits, excuse me. They're going to take their losses. They're going to go ahead and get those losses out of the way because they can go ahead and write those off. Then that quote unquote Christmas rally, that's nothing more than the last option sell off. Because nobody wants to be holding those options to the next year if you're going on vacation in January. Because some people might not come back the first week or second week. They might take 2 weeks off. Then they come back that third and fourth week of January, and boom, you have a potential dip. Now we have the options. This last options just went through. Finito. So now we're going to see exactly how the rest of this dip happens. But like I tell you, there's a January dip, there's a February dip, and there's a March dip. I just really concentrate on the March dip, but really look at this. From January all the way to March, after the halvening cycle, it's a long dip. And that's important to understand. And this dip, this is November again. So you see, after that halving cycle, very low rundown. Right around in August timeframe, really right around here, the robots, I want to say that's what, June? Yeah, the robots right around June timeframe, really even early. I think March, the robots can come back on. Maybe even February, the robots can come back on full-fledged. But we still have a January dip to deal with, to get through. At least to get till February. Let's see. some of the economic data we've been looking at, and let me pull that up. I want y'all to see something that's very important. This right here is the personal savings rate. I want you to look at right around here, right? This is 2020, January. Then all of a sudden February, then all of a sudden March. These are all those stimulus checks flooding out to go into bank accounts. All right? Now look, there's the next stimmy check, right? See these little stimmy pumps. No more stimmy pumps, y'all. November, August had one little bump of some last little injection into the economy around August. And then by November, those checks were gone. This is why November also had a sell-off. First week of November, no more stimmies. No more injection of capital into speculative assets. So our problems are going to be a little bit forecasted negative for 2022 because I want you to look at these hedge funds loans, secured borrowing via prime brokerages, right? Margin accounts, liability level. I want you to look at 2012 and then just look at the liability level that just keeps going up, going up, going up. Security, broker dealer margin accounts, broker dealers, 2020 margin accounts. Look how high these margin accounts are. That's debt, y'all. That is debt. If you're in this market, if you are deep in this market right now, I want you to have a few thoughts about that into the coming year with caution. Y'all need to go on YouTube, and there's some stuff that I started looking at, which was like it was like the largest, what is it? Hold on. Right here. See this? Top 5 stock market day trading fails. Day trading losses and reactions. There are some horrible like just horrible, like grown people crying because there's $120,000 that they owe money, like that fast. So stock market fails, and use that as a guidance post for yourself. Begin to take the lessons of what you see from stock market. Hold on, let me see. Stock market fails. Yeah, all these stock market fails. Just take a look at these and understand just how serious trading is, and not to play games with it. Go into the past, and I want you to look at the roaring. Go back and look at the roaring 20s. I know it's a long distance time away, and it's in black and white. But I want you to see, even if they've got like this, like where it's hip hop and it's old school like this, but think about it. Of its time, this is the people that were going out to the clubs, getting swaggy. And then everybody could go to, everybody was dressed up and looking fly back in the day. And then after the Roaring 20s was over, the Great Depression hit. So take it serious for this next coming year, how fragile this economy is. Love on your family. Tell your friends that you care, and check up on your strong friends, because you don't know what anyone's going through, and you don't know whether or not they're going ham in the market. Please be sure to share this video with anyone that you think or has been talking about they've been trading stocks and have been winning. They can get out and come back in at the bottom and recoup. But if they stay in, if they're leveraged, then it can hurt. Be sure, if you have debt and credit card debt, begin to pull that down. Begin to reduce your debts. Just a little bit. Reduce debts on credit cards, reduce your debt on whatever you can. Because as the interest rates go up, we will get hit with it. Buy low, sell high. They say pigs get slaughtered, right? And that's what happens when you're too greedy in the market. And everyone's saying everything's going to be all right. But back in the Roaring 20s, before the Great Depression, nobody thought the stock market could fall. It was party and bullish. And multiple economists are talking about the fact that we are going to be dealing with some serious waters next year. So I'm asking you to be safe. I'm asking you to think about what other things you can do besides the market. Make sure you're not more than 20% of your net worth in the stock market. That way, you don't have much to lose. Have an ability to earn beside earnings in the stock market. It is not a piggy bank. It is something that should be earning you a percentage over long terms. But how my business uses the stock market is only to use it to push content or push revenues slightly up. It's not supposed to be, 50 to 60% of your income. Stocks are not supposed to be. Your trading should not. Trading is not a lifestyle, and most traders cannot beat just being going up against the S&P 500. So before we close out, I want to go through the charts just so you can see what I've been showing you. And I want to show you these indicators for some of the new things that I've got going on. All right. So here's Seasons of Bitcoin. This is going to be our 2022 version. I've begun getting everything set up for it. You can see I have my dip points beginning to show. There's one of the dips we had called, and we put it in before it happened. And there we are. The dip's playing out. And it's not done. It's not done because, as you can see, we're having negative velocity going down on the Bitcoin market. If we go down to the 12-hour, you can see on the MACD, we're already in negative territory. So as we go closer to the future, it's going to ripple down into what we consider our past, because this is just the day as a whole, as an average, right? So now you can see, and if we got it down to 12 hours, we're in negative territory here on the Willy. We're getting ready to cross negative on the volatility index, and we're already negative in the MACD. Let's go down to the 6-hour chart. You can see we're skimming across, but we're still negative. We skimmed right across, skimmed negative into the Willy, so that means that's definitely a negative sign. Our volatility index is higher, definitely going up into the negative sentiment chart, and you can see we're still pulling into negative zones here. Again, showing that we're going negative. As we're going closer in, as the time is condensing, you're seeing more negative signs. As we get closer, we're getting some weakness. I say overall, if you're looking here at the day, you could just see, for the most part, it looks like we're going to be crossing negative by tomorrow. We should be crossing this line into negative. And that's kind of where we are. We got negative sentiments, negative crossing getting ready to happen. If we look on the weekly, look, we've already crossed a negative on the MACD. All right, so that means another day adds to the weight of this negative sentiment. So we're already crossed negative. See, we have a sell signal here on the weekly. If we go on the monthly, you can see by February, we may cross negative. Round about in February. Unless we get some serious crossing in sometime in January. It could cross January or February. Just depends on the strength of it. And I told you that's our weak zone, which is the third week of January. And that now, today we had trading, or did we have trading? December 31st? Yes, we did. So today we had our trading, and I want you to see, this is the Russell 2000. And I want you to see these lower index stocks. Look what happened. We are bouncing right under the 200-day moving average. Look at that, right to the line. So we're starting to see weakness on the day, starting to get into overbought. We're still positive on our volatility index. Let me check on the 12-hour. You can see where it's definitely reducing in strength, but we still have seemingly some positive power holding this up. Could be crossing on the Willy, which would definitely pull us in negative, but we have positive trends right here. But we do have some weakness showing on the MACD. If we go to the 6-hour chart, you can see we've pulled negative, right? So on the 6-hour chart, 12, we haven't crossed yet. 6-hour chart, we've already crossed negative. But we still got some positive volatilities right here on the RSI. Again, hold on. 3 hours. See, negative. We're skimming. We're poking through. Negative on the Willy, which will definitely pull us down. You can see we're starting to close that gap, pulling into a negative VIX to come back as the RSI goes from positive to a negative RSI. 2-hour chart, See, definitely seeing a lot more red. 1 hour chart peeking through red. Weakness looks like we're going to be crossing red. 30-minute chart crossed red on the 30 already. See, all of this is closing down. So you're seeing we're closing up and getting ready to close negative. So I would not be surprised to see tomorrow potentially sort of spike, if not cool off and roll into a negative day, a deeper negative day. Not tomorrow, sorry. This would be the next trading day, which would be Monday. So that'd be the 3rd. So I'd look at the 3rd to be the negative, to potentially roll over negative. But we'll just keep an eye on it. But here we go on the S&P 500 index. You're still above the 200-day moving average, which is still bullish. But I want you to see something. Look. Notice it couldn't get any. There's no volume. No volume. Getting ready to. Could not break that other higher high. We have not hit our higher high. We've got lower highs. So we'll see where it plays out. But this could. What the Russell has already told us was we were at the end of the steam. On the day, like we're steaming out now. See, we're steaming out. We break it down. We're steaming out. So the Russell is saying we're running out of steam, and though the Russell has the lower ends of these stocks, and those can affect the S&P to pulling it down. And more people are sinking their money into the big name stocks, the Microsofts, the Teslas, the Googles, the Apple, right? But I would just keep an eye, really keep an eye on how this market plays out over the next few weeks, January. Just keep an eye. All right, so I think that's going to be it tonight. I want y'all to be safe. I want y'all to think about how to secure your assets without it being in the market. Concentrate on your ways to earn, especially if you're in music. Where are you putting your royalties? Where how much is your royalties earning? Again, CD Baby is a great place for you to put your stuff up. And you get on TikTok, and then if you get your music promoted through TikTok, you can get yourself a lot more streaming royalties. And then you can do things with those streaming royalties, like put them into assets that can earn for you, right? You can put them into interest-bearing accounts. Look at business accounts as well. They're right now business accounts are earning 1%. And as interest rates go up, it's going to make it more viable for you to pull money, to store to save and earn the interest in your bank accounts again. So just think about it. As interest rates go up, potentially, if they keep them up and the market does not crash, which we know historically it does, we just have to be prepared and get ourselves and our families prepared so that, buckle, tighten the buckles. Remember how you survived 2008 if you've already been through this before. If you went through this in the early 2000s, I didn't really live that because I was not like an adult yet. So, but however you survive that, you're just gonna have to think about it and think about these hedge funds, these pensions that are all in the stock market, and these elderly family members that may not survive the transition. Like, really, really love on your families this holiday season, because this is all we got. We all we got. Truth. I want to wish y'all blessings. This next year will be difficult, but we can persevere. We are a strong nation. We are a strong people. And all we have to do is continue to be what we've always been and what the Most High has been blessed us with. And that's strong beyond our measure and wise beyond our years. Y'all be safe out on these streets. And I'll see y'all in 2022. Peace out.